Hey everyone, welcome back. Today, we are going to talk about something that will completely change your trading game, stop losses. But look, forget everything you've heard about them being boring or just defensive. We're going to reframe this. We're talking about stop loss superpowers. Let's dive right in.
I want you to just imagine for a second, turning every single crypto dip into a potential 10x moonshot, all while making sure you don't lose a dime. Sounds impossible, right? Well, it's not. It's about turning that defense into a seriously powerful offense. So, are you ready to level up? Let's do this.
All right, first up, we're hunting for support zones. Seriously, think of these as the ultimate shield for your entire portfolio. They are like these invisible trampolines on the chart where prices just hit and bounce right back up. Finding them is absolutely your first step to becoming unstoppable.
So, how do we find them? Here are 4 super quick ways. First, historical floors. This is easy. Just zoom out on your chart and see where prices have bounced before. Simple. Those are proven demand zones. Second, Fibonacci retracements. This tool points out these key mathematical levels where price just loves to react, especially the 38.2% and 61.8% zones. Third, check out the volume profile. See those big chunky areas of volume? That's where a ton of trading happened, and that signals strength. And finally, a classic for a reason, moving averages. The 200-day moving average is like a long-term guidepost for support. Look, the most important thing here is just practice. So here's some homework for you. Pull up Bitcoin's 2021 chart. Go look at how it held that $30,000 level over and over again. That, my friends, is a perfect model of a crazy strong support zone. Study it, draw on your own charts, and really make this technique your own. Okay, on to our next superpower, dodging those nasty volatility wicks. This is your secret weapon against one of the most frustrating things in all of trading, the fake out. We've all been there, but after this section, you'll know exactly how to sidestep them.
Let me ask you this, and be honest. Have you ever set a perfect stop loss only to have some crazy, sneaky wick come down, tag you out, and then watch the price immediately reverse and just rocket up without you? It is the worst feeling, right? Well, we're going to put a stop to that. So what's the solution? It's a tool called the Average True Range, or ATR. It's a really simple indicator that just measures volatility. You know how wild the price swings are? The best way to think about it is like the market's heartbeat. When it's racing, you got to give your trades more room. When it's calm, you can tighten things up.
So here's how you actually use it. It's super simple. Add the ATR indicator to your chart. A 14-period setting is usually standard. Now, instead of placing your stop right at that support level, you're going to place it 1 to 2 times the current ATR value below it. This creates a smart cushion. For a really volatile coin like Solana, maybe you use a 2x buffer. For example, if Bitcoin's ATR is, say, $500, placing your stop $1,000 below support gives it the breathing room it needs to survive those crazy wicks.
All right, it's time to level up again. Let's talk about placing your stops below swing lows. This is how you hide your stops right where the smart money does, making them way harder for the market to hunt. It sounds advanced, but trust me, once you see it, it's actually pretty simple.
Here's the playbook. First, you spot the recent swing lows on your chart. You know, those little valleys where the price dipped and then bounced up? Got it? Okay. Next, don't put your stop right at the low. Put it 1 to 3% below that point. That's your buffer against all the random market noise. Now, here's a pro tip. For trending markets, use the swing lows from a higher time frame. So, if you're trading on the 1-hour chart, find your low on the 4-hour or even the daily. Oh, and for a little bonus confirmation, look for an RSI reading below 30. That tells you the asset is probably oversold and ready to bounce. And hey, this isn't just theory. Real talk. This one simple technique is what turned my Ethereum trades in 2024 into absolute monsters. I'm talking multiple 5x winners just by getting this one thing right. It works, and I know for a fact you can master it too. You absolutely got this. Okay, let's get to the final and honestly the most critical piece of this entire puzzle, the 1% golden rule. This isn't just another strategy, this is the secret to survival. It's how you stay in the game forever and build wealth sustainably.
Just remember this number, 1%. This is the single most important rule to protect your capital, period. It guarantees that no single trade can ever wipe you out. It's what makes sure you live to trade another day, and that, my friends, is the whole name of the game.
So how do we apply it? It's simple math that gives you massive protection. Let's walk through it. First, determine your max risk for the trade. That's 1% of your total portfolio. So if you have a $10,000 account, that's $100. Easy enough. Second,
Measure the distance in dollars between your entry price and your stop loss. Let's say for this trade, it's $5 per coin. And third, you just divide. Divide your max risk by that stop distance. So $100 divided by $5 gives you 20. That means your position size is 20 coins. That's it. Your risk is now perfectly defined.
Oh, and a quick little tip here, don't forget to factor in your exchange fees when you're doing this math. And hey, to make it even easier on yourself, just Google position size calculator. There are tons of free ones online. Use them. It's all about working smarter, not harder.
So there you have it. The shield, spotting support zones, the secret weapon, the ATR buffer to dodge Wicks, and the golden rule, that 1% risk management. You have the tools now. You literally have the superpowers. So the only question left is, how are you going to use them to protect and build your empire? And of course, just a friendly reminder, this content is for educational purposes only, and it is definitely not financial advice. Please always do your own research before making any investment decisions. Thanks for watching, and trade safe out there. All right, welcome back to the Pro Playbook. Last time, we laid down the foundations of crypto trading. Today, we're cranking it up to a whole new level. We're diving deep into the advanced strategies, the stuff the pros use day in, day out to manage risk, protect their profits, and really build a fortress in this crazy market. You ready? Let's get into it. Okay, real quick before we jump in. If you're getting value out of this, if this is firing you up, do me a huge favor and smash that like button and subscribe. It tells us we're on the right track, and more importantly, it makes sure you don't miss a single one of these deep dives. All right, let's go.
All right, first up, dynamic profit protection. This is all about mastering the trade once you're in it. Look, anyone can set a simple stop loss and just hope for the best. But the pros, they actively manage a winning trade. We're talking about locking in those sweet, sweet gains while still giving the trade room to run. This is how you really master the game.
So how do we do that? With trailing stops, baby. Think of it like a smart little robot that guards your profits. You start with your normal stop loss, right? But as the price climbs, your stop loss automatically trails behind it, moving up and locking in profit every step of the way. You can set it to trail by a percentage, like 5%, or, and this is the pro move, use something called an ATR-based trail. ATR just stands for average true range. It's a fancy way of saying your stop adjusts based on how wild the price swings are, giving it more space when things get choppy. The end result? You don't give back all your gains on a sudden dip. It's a total game changer.
Okay, let's be real for a second. Tell me if this sounds familiar. You're in a great trade, you set a smart stop loss, and then bam! A massive sneaky price wick comes down, tags you out, and then the price just rockets back up without you. Ugh, it is the absolute worst feeling in trading, right? Well, guess what? It's often not an accident, and we're going to talk about how to avoid it.
Yeah, those are called wick hunts, and they're designed to liquidate traders just like you. They happen to areas where there isn't a lot of buying or selling pressure. So how do you dodge them? First, give your stop loss some breathing room. Don't place it right at a support level. Give it an extra 2 to 5% buffer, just beyond where those evil wicks tend to reach. Also, super important, use limit orders, not market orders. This protects you from slippage. That's when you get a way worse price than you wanted. And if you're really paying attention, you can watch the order books to spot those thin liquidity zones and stay away from them. It's all about playing smarter.
Okay, so we've talked about protecting a single trade. Now, let's zoom out and talk about your whole setup. It's time to build your pro trading arsenal. This is all about fortifying your foundation, the exchanges you use, the tools you trust, and how you keep your crypto safe.
Not all exchanges are created equal, and choosing the right one is a huge part of your strategy. For instance, if you want to get fancy with your orders, Binance is a beast. They have things like OCO orders. That's one cancels other. It's brilliant. You set both your take profit and your stop loss at the same time, and when one hits, the other one automatically cancels. Super slick. If you're trading a lot, you need speed and low fees, and that's where Bybit shines. And hey, if you just want that peace of mind, knowing you're on a super regulated, secure platform, you can't go wrong with Coinbase Pro. It's all about the right tool for the job.
All right, let's talk security. And I mean real security, not just a strong password. This is non-negotiable. Get your crypto off the exchanges and onto a hardware wallet like a ledger. This is cold storage. It's offline, away from hackers, period. Want to take it to the next level? Look into a multi-sig setup. That means you need multiple keys to move any funds, making it basically hacker-proof. And listen, security isn't just about defense. You can go on the offense with on-chain tools like Glassnode to spot what the big players are doing. And yeah, even AI agents are coming into play for analysis. This is the next level stuff that separates the amateurs from the pros. Leverage. Okay, let's have a serious talk about this. You see those screenshots on Twitter of people using 100x leverage? Forget about it. That's not trading, that's gambling, and it's how you get wrecked. The magic number for pros? 3. 3x. That's your maximum safe leverage. Any higher and you are playing with fire. Keeping it low means you can weather the storms, you can stay in the game, and you don't get liquidated on a random Tuesday. This is how you build wealth sustainably, not by hitting a lottery ticket.
Okay, we've built our arsenal, we've fortified our defenses. Now, let's look to the future. Our final section is all about how to future-proof your strategy. Because, let's face it, the crypto world changes at lightning speed. If you're not looking ahead, you're already behind. Let's see what's coming.
So what does the crypto roadmap look like? Well, first, regulation is coming. Expect KYC everywhere by 2025. And you know what? That's not a bad thing. It means safer markets. We're also going to see a huge boom in RWAs, real-world assets. Think tokenized real estate. This will bring totally new kinds of volatility you'll need to adapt to. Then, by 2026, tech like Layer 3s will make chains so fast that slippage will become a thing of the past. And of course, AI is going to get way smarter, scanning social media sentiment to find support zones before humans even see them. These aren't threats. They are massive opportunities if you're prepared.
And before we wrap up, I gotta get you hyped for our next banger. We're talking altcoin rotation strategies. This is the one you've been waiting for. We're gonna break down exactly how the big money flows from Bitcoin into the altcoin market, creating those explosive, life-changing pumps.
We're going to teach you how to read BTC dominance like a map to alt season. We'll show you how to rotate your profits from DeFi to gaming to NFTs to maximize every single move. We'll even dive into the on-chain metrics that let you time your switches perfectly. Trust me, you do not want to miss this, so hit that notification bell so you get your ticket to the moon.
All right, and of course, I gotta say it. This is not financial advice. This is for your education and entertainment only. Please always do your own research before making any moves. All right, that's it for me today. Let's go to the moon together, legends.